I am are the two most powerful words in the world, because whatever you say after I am shapes your reality. So you want to make sure that you are speaking positivity over your life. I am powerful. I am a conqueror. I am a dominator in all my trades and endeavors, in all my businesses. I am, man, what? What are you? I am. What comes after I am? That's going to shape your reality. Now, here, the Billionaire Boss Empire, our morning affirmation is this: I am a master trader, and with every trade, my balance grows. So think about that, guys. You are a master trader, meaning you are the bomb when it comes to trading on this Forex thing. And not only that, but every time you put in a trade, your balance gets bigger and bigger. That's what you believe. That's what you are focusing on. That is where your mindset is going to be. Not only that, but I am a master recruiter, and like-minded individuals are drawn to me. So you know what a blessing this opportunity is, and it's so exciting, and you want to share it with others, that you have got to share this information, and other people are going to be drawn to you that's going to want to do the exact same thing. Okay, guys, our morning scripture is Matthew 7:7-8. Ask, and it shall be given you. Seek, and ye shall find. Knock, and it shall be opened unto you. For every one that asketh receiveth, and he that seeketh findeth, and to him that knocketh it shall be opened. Guys, you have not because you ask not. What are you asking for? What are you expecting? What are you looking for? It's up to you. This is yours. This is your business. How do you want it to grow? How do you want this Forex thing to go for you? Speak it. Be careful what you speak over yourself, because there is power in the tongue. So be careful what you speak over yourself and what you allow others to speak over you, because you are too awesome and too amazing for anybody to put you down about anything. Oh, you're going to lose your money. Oh, that's just a scam. Well, I understand you're still confused about money, and I'm so sorry about that. But as for me and my house, oh, God blessed me with this opportunity, so we about to make this money. So I'll hit you up later. So you have to combat that. Don't let anybody speak anything negative over you. All right, and then you guys know what we do. Let me go ahead and refresh. This is forexfactory.com. I'm going to refresh to see if they've added anything. Okay. And they have not. Okay, so this right here, forexfactory.com, this is what we look at so we can see what's going on in the news. This is so important. You have to know what's going on in the news. All right, so right here at 10 a.m., Chairman Powell is going to speak. Guys, do you see that red folder? That is a high impact folder. That means, whoa, wait. If you are in a currency pair with the USD currency, you might need to get out, because it may affect your trade negatively. It could spike in the opposite direction. It could hit your stop loss, or it could just take you out. So if you're in profit, you may want to get out, let it regroup, and see what direction it's going to go in. Now, since this is 10 a.m., more than likely, listen to me, you know the bell rings at 9:30. Have the 9:30 bell. This will probably affect that 9:30 bell if you're one of those that like to get in that US 30 at 9:30. Be careful because of this right here. All right, there's not another one, but I do want you to see this right here. This is all day. JPY, the bank is on a holiday. So the banks are closed for the JPY. So if you are in a currency pair with JPY, understand that that JPY may not move the way that you're used to it moving. That's because the banks are closed. But the other currency pairs that are going up against it are not closed today. So it will still move. It just may not move the way that you're used to it moving. All right, so you guys know what we're going to do. I was marking it up. Let's take a look at this US 30. Okay, you can see it has been in a steady, strong sale. It's in a downtrend. Right now it's going through a little pullback, but it has been in a steady, strong downtrend. The 1 hour is in a sale, as well as the 4 hour is in a sale, and the daily is in a sale. All of them. So we know that this right here, this US 30, it is in a sale. So remember, the trend is your friend. Okay, so yes, the US 30 is selling right now. It's just got some pullback. That alligator mouth is wide open. So this is what we look at when we get into a trade. We look for that green to cross the red, and then that's when we can get in. With the green cross the red and the blue, you know what to do. You get in and you ride that alligator mouth. As long as that alligator is eating, so are we. But I do not recommend you guys to get into the US 30 this early in the game. I want to make sure that you guys understand what you're doing, understand the strategy, because that can definitely, it can make you a lot of money, but guys, it can also lose you a lot of money as well. Because when that green crossed the red, that was actually with this candle right here. So if you wrote it all the way down, right here, okay, that is 5,473 points. Now, that's been over a span of 4 hours and 45 minutes. It dropped 5,473 points. Now, with the US 30, we know that the standard lot size is 1. And a standard lot size, it's going to get you $10 per point. So if you're looking at this, that is 5,473 points times $10. So in 4 hours and 45 minutes, you could have made $54,730. All right. But you see how it flipped? Look at that. That piece. What is that? Are you wanting to say something, Mr. Kimbrough?
Oh yes, ma'am. Hey y'all, just rule of thumb when you're trading, you know, it's for the lot size, it's 0.1 for every $100 that you have in your account. So if you have $500 in your account, you can set your lot size at like 0.05. You have like 300 in the account, it's like 0.03 until you start moving up. So that's just rule of thumb, because we only risk 3 to 5% of our overall account. That's it.
All right. Thank you so much, Mr. Kimbrough. And just to go along with what Mr. Kimbrough said, remember, you've got the compound growth chart that you can get from the Telegram group. It's in the Telegram group. Exactly what he was saying, guys. Whatever percentage you are trying to grow your account, whatever you open your balance with, you'll put, this is an Excel spreadsheet, so you can change it to fit you. All right. So if you're starting with $200 and you want to grow it by 20%, that is exactly what he just said. Okay, here's your lot size if you want to grow it by 20%. You can change this and do 10%, and it's going to change all the information. Okay, so you guys can go to the Telegram group and get that. All right, so with that, all right, so that is the US 30. As you can see, it has turned and it's got a lot of pullback. This is why you don't want to get into the US 30 when you're new, because it can definitely frighten you. It can scare the bejesus out of you, because that, just imagine you is going good, you in the positive, and then it starts going back. That's $10 for every point. Okay, now you guys know that I like to show you a side by side of the US 30 and the German 30, and that is because they run so parallel. I mean, usually the US 30 and the German 30 are going to be doing the exact same thing. So here's the thing, the reason why I compare and I show you these two, if you're wanting to see how this runs, you want to kind of practice and get into, the US 30, I recommend you doing the German 30 first, because although the German 30 still has a standard lot size of 1, it's not $10 per point. So it's actually a little lower. So it doesn't hit your account as hard, but you're playing around in your demo account. And that's when you want to know, that's when you want to get your practice in. Practice, practice, practice. Okay, so with that being said, let me see what it's doing. Okay. All right, so, and I'm just going to let it ride. I'm just going to let it continue to ride out. That is the US 30. What's the German 30 doing? Okay, German 30 almost made it down to my take profit, but I'm going to let it do what it do and keep riding. Okay, gold is another one that, whoa, goodness gracious, that really, really moves. Let me see. 1 hour is in a sale. 4 hour is in a sale. What's that daily looking like? Okay, this daily is sideways. Remember, there's 3 directions for the market: up, down, and sideways. So this is what we look at. We look at our stochastic. Okay, the stochastic tells the story. So the stochastic says once upon a time. So it's going to happen here first in the stochastic. And we can kind of see that it's starting to get its curve. So it's getting ready to experience pullback. We know that. All right. When we get in, we look at the green crossing the red. And when it crosses the blue, that alligator mouth opens wide up. And we ride this alligator mouth. So as long as the alligator is eating, so are we. We look at these PSARs to know and to judge where we want to put our stop loss. Because more than likely, what will happen is, if there is pullback, it will not come above that PSAR unless it flips, unless it completely changes direction and the PSAR flips to the bottom. The PSAR lets us know the reversal in the market. So right now we know that the market is in a sale. Over here, the PSARs were on the bottom, so we know that it was in a buy. So when it is in a sale, the green has crossed the red and the blue, and you're riding, what you're looking for is for the green to cross the red back in the opposite direction. When it goes in that opposite direction, then that's the point where you want to get out. So let's see if we've got some trades that we can get into. And see, all the GBPs were selling this morning. GBPs are really good. Let's see. The 1 hour's in a sale. The 4 hour also in a sale. So we know the trend of the market is in a sale, but look, we've got pullback right now. So if you were to get into this right now, you can see the stochastic is below the 20 and it's going into an upward momentum. At this point, it is getting ready to go into pullback. So you want to wait. You don't want to get into, you could, but you need to make sure that your account balance can hold your pullback. Because what will happen is if you were to get into a trade and then it turns back and goes into a sale, then yes, that's going to get you more money. But you don't want to risk that. That's more for aggressive traders. An aggressive trader would do something like that. Until you learn the strategy, until you can read the market, until you can say, okay, this is what it is going to do, then what you would do is you would do a pending order. You can set up a pending order or just put it on your watch list. When you get ready to trade, guys, you should always have your pencil and paper with you when you are trading so that you can write down the currency pairs that you want to go back and look at. So right now we're at GBP USD. We know the trend of the market is in a sale, but we can see that it's experiencing pullback right now. So if we were to, let's see, I'm gonna come over here and I'm gonna pinch this down. It's gonna squeeze it. Okay. So we can see that the next support and resistance area is down here, but it is right here at this support and resistance line, and it's having a hard time pushing through. So the reason why this is called support and resistance is because right now it's the floor. It's the floor, it's holding it up, it's trying to push through the floor. So it's support. Think about the floor supporting you. Now that same, let's see if I can find it. Come down here, shrink it. All right, there it is. All right, make this a little bigger so that you guys can see. Now, this is the exact same line that we're at right now. We're at the exact same support and resistance line. So, as you can see here, it was trying to push up. It would come up and then it come back down. It would come up and then it couldn't get past this line. So now it's a resistance. Think about the ceiling. It's a ceiling. The ceiling is resisting. So you have to try to push through the ceiling. So that's why it's a support and a resistance line, because this gray, this dotted green line right here, this is actually where our current trade, this is the current price right now. So here you can see it's trying to come up and push through the ceiling. The same line coming straight over, now it's trying to push through the floor. So it is a support and a resistance line. When you see that it reaches a point where it's having trouble either going up or going down, that lets you know that is a support and resistance area. And when it touches that location multiple times, that's a strong support and resistance area and a good place to put your support and resistance line. Okay, so we know it can come down to at least here. So we would want it to come below this point here before we decide to get into a trade, because it could turn around. All right, so let's see. Let me see what GBP, JPY. Now remember, JPY The banks are closed all day today, but we've got some pullback. Let me see. Okay. The 1 hour is in a sale. So I'm looking at this downtrend. I can see the candles. I can see the alligator is in a downtrend. Go to the 4 hour. I'm seeing the exact same thing. It's still selling. And the daily is also in a sale. So remember, the trend is your friend. So we can see the trend of the market is in a sale. So we know that right now, GBP JPY is in a pullback. So we won't get into this one. We'll wait. I may come back and do a pending order on those, depending. Well, they're all going to do the same thing right now. All right. 1 hour's in a sale. 4 hour, the green has crossed the red, approaching the blue into a sale. So we know that's what we look for. So we know that the overall trend, again, is in a sale. Now, when you see the doji candles like this, where they have the wick coming out of both ends of the candle, that is a confused candle, and that is, we don't get in. Now, if you're already in a trade at this time, that is fine, but you do not want to enter a trade when it is like this, when it is confused. Like this right here, when it's consolidated, this is not when you would enter a trade. Let's see. You want to say something?
Yes, ma'am. While she's sitting there, she's finding trades, y'all. See if y'all can find some trades out there. There are a lot of currency pairs out there. Just look and see what y'all can find and put it in the chat. Let's see what we can see.
Mm-hmm. All right, let's see. This is GBP AUD. It's doing the same thing. Let's take a look at the NAS. Everything is doing the same thing. Okay. 1 hour is in the sale. 4 hour is in the sale. And the daily. All right, so this is the NASDAQ. And it can also make you a lot of money. And the standard lot size is 1. So it is in a sale. That's the trend of the market. It's in a sale, but it's experiencing pullback right now. What about, okay, maybe EUR/USD? That's one of the 7 major currency pairs. We might have one. In a sale, up. All right, guys, we have us a market execution. All right, EUR/USD. EUR/USD would be a market execution. And we've got our support and resistance line that it's heading to right here. So we can use this as our take profit. Let's go ahead and lay us down a stop loss. We're going to turn it red so that we can see the difference. All right, here's what we look for when we're placing our stop loss. The first PSAR is under the first candle. Second PSAR is under the second candle. So first or second PSAR is where we're looking to place our stop loss. Okay, so it's wherever you feel more comfortable. If you want to do the second PSAR, if you want to get it closer and do the first PSAR, it's perfectly fine. Okay, so let's go ahead to our MetaTrader 4. And let me see, EUR/USD. Do I have that one open yet? I do not. Let's grab. Now I don't know why I have 2 NASDAQs, but let's come over here and grab EUR/USD. I'm going to drag it over to my chart. I'm going to drop it, and we're going to go to new order. Remember, your lot size needs to be comparable to your account balance. And that is where That's where your compound growth chart comes into play. Okay, so if you're starting the account balance with $200, you're looking at 0.02 for your lot size, and you'll get 98 pips, and that's going to get you your goal of $20 for that day. All right, so this is a sale. We're going to do a sale by market. Boom, put it in. Got our market execution. I'm going to bring it down a little bit. All right, and we are already in profit. Let's see, it's kind of running back and forth. So this is what we're going to do. We'll come down to our trade that we just put in. We're going to double click. Now, this right here, sometimes market execution will come up. We don't want to do another market execution. What we want to do is we want to modify our order that we just put in. So what I'm going to do is I'm going to come up here. I'm going to slide my MetaTrader 4 over to the side so that I can see it. And I'll slide this over a little bit so I can see. All right, right here is what we're going to put as our take profit. The support and resistance line right here. And the stop loss that we set is right here. So that's what we're using for our stop loss. So this number we are going to enter right here in this box where it says stop loss. So we'll click here, and this is the number that we're going to enter. 1.18396. Now you want to make sure that you're putting your decimal point in, because if you do not, it's not going to be the correct number that you're wanting. If you don't put that decimal point, it's going to stay over on this side until you do. Okay, let's enter our take profit, which is going to be this number right here. Now I'll show you 1177. As you can see, that is not the number, and it's not going to let you modify it because that's not the correct number. Okay, so 1.17762. All right, now we can select this, modify. Okay, we've got our stop loss, we've got our take profit. Let me bring it over so you guys can see. Let's see, actually we just had another candle to form, so we've got another PSAR. So here's our stop loss. Okay, so if you hover over the stop loss, it'll let you know that you are 48 pips away from your entry point. So look, we're looking at the box that's popping up. Okay. All right. Get back on it. All right. The first thing you're going to see, excuse me, is the amount that would hit your stop loss for. And then it's going to let you know that you are 48 pips away from your entry point. But because we are above, we've got the second and the PSAR down here, we can actually hover over that stop loss, left click, and drag it down. We can drag it down to the first. Now look, now we're 37.3 pips away from our entry point. And this is what happens as you move your stop loss. You want to follow your PSAR. So the first and the second PSAR is what you want to continue to move your stop loss. Okay, I'm going to shrink this so that you can see where my take profit is. It's here. I'm going to hover over it. And that is actually 15.4. So there's no decimal point. There's not 154 pips. That's 15.4 pips in profit. And that's how much you would get based on your lot size. So as your account grows, as you have a larger account, you can use those larger lot sizes. And as Mr. Kimbrough said, we do not recommend you risking more than 3% of your account balance. Okay, we want to make sure that you guys use proper risk management. Now, I want to show you something on the German 30. Okay, excuse me. Okay, so guys, this trade has actually been running for me for a while. Excuse me. I'm sorry, let me grab me some water. About to lose my voice. Okay. So as you can see, I've got the German 30. It's already 161.2 pips in profit. Here's my stop loss. I made it a point not to move my stop loss until I got on here with you guys so that you can see this is what you want to do. You want to follow the PSARs. Okay, you want to follow the PSARs. See how it had its pullback? It went to the pullback. It got up to that PSAR, but it did not flip. So what? It came and it came back, and it continued in the direction. So what you want to do is you want your stop loss to stay behind that PSAR. So this is our entry point right here. So because our stop loss is above, guess what? Now that PSARs are in profit. So even if it does come back and hit our stop loss, guess what it's going to do? It's going to take us out in profit. All right, so we're going to left click, hold that stop loss down, and put it above the first or the second PSAR. So even if it does now come back and hit my stop loss, it's taking me out in profit. Okay. Now as it continued to move down, let's see. Before it was around up here somewhere. You see how far away it was. So if you don't move your stop loss, and it turns and it spikes back in the opposite direction, guys, you do not want it taking you out for that much. That's why you want to make sure you continue to follow. As you can see, you continue to follow that PSAR, you're going to get closer to your entry point, and that will in turn cause your stop loss to get smaller and smaller. So now, because it has passed our entry point, we are in profit. So that's just like if you're doing a trailing stop loss. Okay, trailing stop loss, you right click, come down to where it says trailing stop loss, and then, excuse me, these are points. The points convert to 5 points, converts to 0.5 pips. So that's a half a pip. 10 points converts to 1.0 pips. So that's 1 pip. So on and so forth. So you've got 1.5 pips, 2 pips. Let's see. All right. And what that does is that keeps, excuse me, guys, I apologize. That keeps your stop loss tight, so that when it pulls back, it is going to take you out in profit. So that's what a trailing stop loss does. As a matter of fact, hold tight. Let me show you. You guys know how I am with my PowerPoint. Okay, so here you go. You have a trade and it's running, okay? And you've got your trailing stop loss set. So here's the stop loss up here. So the trade is running, and right now it's a negative 0.3 pips. But as soon, watch this. Look right here. As soon as that trade gets into profit, now you see it's no longer there. That stop loss moved, and it moved into profit. So now when this current rate pulls back, it'll hit that stop loss, but it's going to take you out in profit instead of taking you out in a negative. So if your stop loss stayed up here and it came back, it would come out and it would take you out in a negative. But if you set a trailing stop loss, guys, when it gets into the positive, depending on how far you set your trailing stop loss, that price point comes back, traces back, and it's going to take you out in profit. So what the stop loss does, it now follows 1.5, 2, however many pips you have it set, it is going to follow the current rate that far. It'll stay that close. So when it retracts, by 1.5 or 2 pips or whatever you set it for, it's going to take you out in profit. Does anybody have a question about what I just said? Or anything that I have said so far this morning? If anybody has any questions, please feel free to unmute your mic and ask. I do not mind. Or if you want to type into the chat, if you have a question and you want to type it into the chat, feel free to do so. I want to make sure that you guys understand exactly what we are doing, exactly what you have. Okay, so let's see. Let's go back to, yes, okay, I see 2 people have their mics unmuted.
Don't have
Questions?
any questions. No, I just can't. I mean, I'm not at that point yet, so I'm just watching for right now.
Okay, yes, ma'am, and that is certainly not a problem. Certainly not a problem. But I want to make sure that everybody gets a good understanding. Miss Pat, do you have a question?
Yeah, when I'm doing my stop loss and stuff, I sometimes get confused about how to bring it up, do the double clicking and stuff,
Mm-hmm.
and I keep getting confused when I'm trying to do it, or when the meter's going and start going to negative. I'm still learning not to trade with emotion, but I'm
Mm-hmm.
not there yet.
Well,
So
and
when
that's the thing. You trade without emotion. Understand you are going to experience pullback. Do not be afraid of the pullback. Let me see. And guys, let me check, make sure my stop loss is still where it needs to be. Okay. First a second. That's fine. Let's see. EUR USD. Now, Ms. Pat, understand that you're going to have pullback. Okay. As a matter of fact, let's see. Let me see. Give me a second. Okay. Guys, let's talk about the spread. Okay. You've and I'm going to show you what the spread is. We can see it here better. Okay, so you guys see those little tiny numbers up there in the corner? That is called the pipette. Okay, these numbers down here, these are the pips, and that little tiny number is called the pipette. So first, I'm going to explain the pip. Okay, so pip stands for point in percentage. So this is what a currency pair will look like. This is an example. Here you've got the pip. Here you've got the pipette. Okay, the pip measures the amount of change in the exchange rate for a currency pair, and it's calculated using the last decimal point. So since most major currency pairs, they're priced at 4 decimal places, the smallest change is that last decimal point. Okay, so if this was a 0, this would be a 9. Okay, all right. Let's see. Antoinette, did you have a question? No, I'm sorry. Okay, no problem, no problem. All right, so here it is. The smallest is that last decimal point, and it's going to be equivalent to 1/100th of 1%. So with the currency pairs that are placed with the 4 decimal places, 1 pip is going to equal 0.0001. Okay, so right now this is 10 pips. The yen-based currency pairs, those are the exception. They only have 2 decimal places. And I'm going to show you guys that. It only has 2 decimal places. So that 1 pip for a yen-based currency pair is actually 0.01. So when you are setting the trailing stop loss, like I was telling you guys about before, when you're setting the trailing stop loss, the 10 pips is actually going to be 100 points because you're thinking about that decimal point being right there. Okay, so when we choose the 15 points, that is equal to 1.5 pips. And then there are some currency pairs that allow you, and you just saw it, the one that we're in right now, the EUR/USD. That is one of the currency pairs that allow you to do the 0.5. Okay, and that will be a really, really tight stop loss. You may not want it that close because of how the currency pairs move, they move back and forth. So that 0.5, that's really tight. So basically all the rate has to do is move half a pip and it's going to take you out. It'll take you out in profit, but it'll take you out. All right, so the next thing, here we go, the spread, those little numbers. So when you buy an asset, okay, or a currency pair, that's what the asset is, there has to be someone on the other end who is willing to sell that asset to you. That's your broker. So likewise, when you're selling, there has to be someone on the other end that's willing to purchase. So the lowest price that a seller will sell a given asset to you is referred to as the ask price. Okay? The highest price that they will that the buyer will purchase an asset is the bid price. Okay, so let me bring this back up. Do you see this right here? Ask, bid. This is the price. Okay, so remember, the lowest price that a seller will sell an asset to you, the lowest price that they'll sell is the ask price. The highest price that a buyer will purchase is the bid price. So we're at EUR/USD. Look right here, EUR/USD. This is our bid price. This is our ask price. This is what it looks like here. This is what it looks like here. And you can see those pipettes. Now, the spread, let me come back. The spread is the difference between the bid and the ask price at any given time. So when you enter a trade, you will have to pay this difference to your broker. So that's why anytime you enter a trade, you are going to enter a trade in the negative. So don't freak out, don't panic. Oh no, it must be going in the wrong direction. No, that's what it's going to do. That's why we don't trade with emotion. Okay? So we've got that. So when you enter the trade, you've got to pay your broker, and the spread will naturally always be changing. So it's advantageous for you to keep an eye on it before entering a trade. That's a good thing, so that you can avoid unnecessary fees or loss. So what that means, let's come back over here. All right, so what that means is the lower, the tighter that pipette, that's a good entry point. That's a good entry point. Okay? All right. Any questions about that? Any questions? Any questions? Guys, I love what I do. I love what I do. This is, guys, this is so fun to me because you couldn't tell me that that I was going to be doing this. Now, I will tell you this. One of my remember, I told you guys, we tell you write down your 15 I am affirmations. One of my 15 affirmations was, I am a beast of a master trader. Okay. And then another one was, I teach Forex training to anyone with ease because I'm the best at it. Guys, that was even before I knew how to count a pip, what a pip was, when this chart was still looking confusing to me. But I was like, you're not going to win. You're not going to be the boss of me. I'm the boss. I got this. And today I am here teaching it to you guys. I'm excited. So please don't ever look at this and be like, I can't do it. This is too much. I promise. I promise, guys, it is really easy. And that's why you want to make sure that you get into your back office, get into your Epic University and study. Guys, I'm still studying. You're always a student. Don't ever feel like you know everything about everything, because I promise you do not. You can always learn. There's always something else that you can learn. Miss Pat, you have a question?
Yeah, remember I told you I've lucked out so far and come back and I'm making profit in trading.
Mm-hmm.
My question is, what did I forget to do? 'Cause I figure once I said it, that's it. When it's over, it's over. But I've come back, like I said, the first time I made 156 in points, and then the next time I made about 7 or 8. I can't remember the second one. 'Cause I'm still mind blown about the first one. But what am I not doing to stop the trade and make sure not don't keep going and going, even though I think it's over?
Okay, so here's the thing. With the Billionaire Boss Empire, guys, we tell you to always set a stop loss. I don't care what trade you get in. I don't care how long you plan to be in it. Always set a stop loss, because if something happens in the market and it spikes in the opposite direction, you want to make sure it does not blow your account. So with that being said, although we tell you to make sure you always set a stop loss, you do not have to set a take profit. We ride the alligator. So we say, as long as the alligator is eating, so are we. So if that alligator is eating, which is this right here, this is the alligator, as long as that mouth is open, we ride it out. Guys, on Friday, every Friday, 8 p.m., let me see. Mr. Kimbrough, I can't remember. Is that being done on the Capital Cruise link as well when I do that?
Do what?
When I show the new people how to set up their trading view, MetaTrader 4 broker, is that being done on the Capital Cruise link as well?
We can do it both ways on either link. If you show it to them on that, we can also show it to them on ours. It doesn't matter. So
Okay.
do it both ways.
So I believe what Coach Reg and Dr. E said was on Fridays, the 8 p.m. calls. Remember, guys, we're saying that we're now going to be on Capital Cruise link. They're going to have me continue like we did it on ours, continue every Friday to show you how to set up your trading view account, how to get your trading view to look just like this one, how to get your broker, get a broker's account so you can have a demo account, and then also download your MetaTrader 4 on your laptop or desktop, computer, whatever you have. So that is on Friday. So make sure you guys get your new people that have signed up, that haven't had a one-on-one personal Zoom with me so that I can set them up. Make sure they get on those Friday calls so that they can get this very important information so that they can start getting in and practicing. So I do want to make sure you guys know that. So like I was saying with you, Miss Pat, you want to make sure that you have your stop loss set, but you don't have to have a take profit set. What you can do, you have a couple of options. Because we ride the alligator, you can either set a trailing stop loss and let that stop loss follow that rate. And then when it retracts, then it'll hit the stop loss and take you out in profit. Or if you're going to watch it, you wait for that green to cross the red back in the opposite direction, and then that is when you close out your trade. So if you've got a trade that that's still running, then that means you're still riding the alligator. Because understand, let me see, does this one have, yeah, ooh, tomato tomatoes. Did you get okay, guys, I'm sorry. I just got lost for words when I saw this right here. Guys, this is money. This is money right here. Okay, let's see how many pips this was. Tomato tomatoes. Okay. So let me see if I can make it a little bigger so that you guys can see. Then I'm going to bring it over. Whew, let's see how many pips was this. All right, when the green crosses the red, which would have been this candle right here. So let's grab the ruler. Green crossed the red. Wait, hold on. Trying to make sure you guys can see it. All right, grab my ruler again. Okay, so here we go. The green crossed the red right here. Okay, so the green crossed the red. It was on this candle. But remember, I told you, you got a wick coming out of both ends. So what that means is it went up to a buy, it came down to a sell, it was confused. So we would not have gotten in here, but this candle right here, it's a perfect candle. Nice flat bottom. The wick is coming out the top. That's a beautifully lit candle. So we would have gotten in on this candle. And then we would have rolled that alligator mouth. Just rolled it. Okay, it would have come up to here. Then it would have started coming back. Because it started coming back. And right here is where the green crossed the red going in the opposite direction. All right, so that would have been this candle. So from the time you got in to the time that alligator stopped eating and crossed back in the opposite direction, that was 72 pips. 72 pips. Now, that was a span of 19 hours and 15 minutes. So it depends on your lot size, how much that would have gotten you. So let me see. Did I? All right. Let me do this. Make sure you guys have this information. Now, what I'm about to show you is also, it is 6 o'clock. Okay, what I'm about to show you is also in our Telegram group. And let's see, this is the lot size. So that, hold tight. Here we go. There she blows. Let me grab it. Bring it on over. Okay, now this is also in the Telegram group. So if you are on a lot size, you're starting your count off, and you've got 0.02 for your lot size. Okay. If you just got 72 pips, 20 cents for each pip, okay, that's $14.40. But remember, as your account balance grows And then you can use a higher lot size when you get up to 0.10, 0.10 lot size. That is $1 per pip. Okay, so now you're looking at 72 pips at $1 each. It's going to get you $72. So that the same number of pips, it's really determined by your lot size. And your lot size is determined by your account balance. So that's why you want to grow your account balance, allow it to build so that you can use a higher lot size. Any questions, guys? Any questions? All right. Well, guys, that is actually our call for the day. That is our sixth, Mr. Kimbrough.
Oh, excuse me. I'm sorry about that. Good
Would
job.
you like to close us out?
Yes. Y'all look in our WhatsApp group. I told y'all that I was gonna put the candlestick patterns and names of different candles out there. Y'all go look at them. Excuse me, y'all. Go look at them and learn the candlesticks. And I'm telling you, it's going to help you. And I also put a candlestick strength indicator in there also. When your candles get smaller, you can look for a turnaround. You can look for a reversal or a pullback. So go and look at them, study them. I'm telling you, it's really going to help you out when you know what you're really looking at. So I put that in the WhatsApp group. Y'all go ahead and look at it. Thank you for being here this morning. Let's continue to grow. Let's continue to learn, educate ourselves, and become our own banks. You could have been anywhere else, but you chose to be right here with these billionaire bosses. Y'all trade like champs today and every day for the rest of your lives. That's all I have. That's our call. Thank you.